Hello.
Yes, sir. What's your name?
Ma'am, I'm an investor. Amit Kashyap.
Amit?
Amit Kashyap.
Amit Kashyap. Company name? So, which company are you working in?
Sublab Research.
Chandana?
Sublab Research.
Sorry?
Sublab.
Sublab Research.
SUBH Sublab Research.
The conference is now being recorded.
Ladies and gentlemen, good day and welcome to the EID Parry Q4 FY21 results conference call hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Aditya Bagul from Axis Capital. Thank you, and over to you, sir.
Thank you, Bilal. Good morning, ladies and gentlemen, and a warm welcome to the Q4 and FY21 conference call of EID Parry. I would apologize for the slight delay that we have, but we have the entire management team here, so without further ado, let me just introduce the key management team here. We have Mr. Ravichandran, Chairman, Mr. S. Suresh, Managing Director, Mr. Ramesh Kumar, CFO, Mr. Murugappan, Head, Strategy and Nutraceuticals, Mr. Suresh Kannan, Full-Time Director, Parry Sugars, and Mr. Biswa Mohan Raj, Company Secretary. I won't take too much of time. I'll just hand over the floor to Mr. Suresh. Over to you, sir.
Yeah, good morning, everyone. Apologies for the slight delay. I would like to start off first saying thanks to all the people who have joined us on this analyst call for taking the time out. I'd like to start off with the happy note that the standalone revenue from operations for the year ended March 21 has been at 2,024 crores as against the previous year of 1,875 crores. EBITDA before exceptional item has been around 556 crores as against the previous year value of 235 crores. And the standalone profit for the company stood at 865 crores as against 2 crores of previous year. The operational performance of the company was better than the last year on account of better realization from sugar and distillery operations and the higher export volumes and various cost control measures which we have been taking. I'd like to give a brief on the international sugar scenario. For the subsequent sugar year, the Brazil is expected to be having a 4 million shortfall from the current year. That is, from a 38 million tons, Brazil is expected to produce around 34 million tons. On account of the rising crude oil prices and the ethanol prices, the mix is expected to be more favorable towards ethanol, and higher output of sugar from Brazil is not expected much. And India is expected to remain at the same level of the current year after accounting for some ethanol diversion of close to around 2.5 to 3 million tons of sugar equivalent. As far as the international sugar balance is concerned, European Union is expected to get around additional 1 million tons, whereas FAR is expected to go up by almost 3 million tons. That means overall the scenario is expected to remain almost the same level in terms of the production of the current year. That means there is an opportunity if Indian exports have to happen. There is an opportunity for India to export in the international market, subject to prices being favorable for the exporters. On the domestic front, I think monsoon has set on time. That is going to augur well for the entire crop. On an average, there should be a minimum of 10% increase in the production. The expected increase in production is expected to go out in terms of additional ethanol production for supply to the oil marketing companies. This is a broad overview. I would now hand over the floor to Mr. Ramesh Kumar, our CFO, who is going to take you through the details for the last year operations. Thank you.
Thank you, sir. Thank you all. Thank you all for joining this call, and welcome everyone for this call. I'm happy to share the performance of the company for the year 2021 and also some of the operating parameters, what we have done during this year. The revenue of the company for 2021 was 2,024 crores, which is more by 8% as against the last year of rupees 1,875 crores. The increase in revenue is predominantly an account of, as Mr. Suresh explained, better realization in sugar, power and alcohol, which helped the sugar division to perform very well. We sold around 4 lakh metric ton of sugar as against 3.73 lakh metric ton in the previous year. The revenue for the quarter ended 31st March 2021 was 564 crores as against 608 crores last year. We had also export during the financial year 2021 around 1.15 lakh metric ton as against the previous year of 0.8 lakh metric ton. The PBT for the year on a continuing basis of the exceptional item is 1,058 crores as against the loss of 20 crores last year. The PBT after exceptional item for the quarter ended is 234 crores as against 118 crores last year. The PAT for profit after tax for the year is 865 crores as against 1.83 crores of last year. The exceptional item is mainly on account of profit on stake sale and also it is netted against impairment loss on transfer of equipment and dismantling of the equipment to our Karnataka units. On a consolidated basis, the PBT for the company was 1,539 crores as against the last year of 1,266 crores, backed by very good performance by our subsidiary company, Coromandel. The profit after tax for the company was almost 1,000 crores at consolidated level as against 889 crores. Let me share you with some more operating numbers of the business. As far as the sugar segment is concerned, the company crushed around 39.69 lakh metric tons as against 36.72 lakh metric tons of sugarcane last year, which also had a very good recovery of 10.28% as against 9.99% of last year. The production on a full year basis was about 3.91 lakh metric tons as against the previous year of 3.6 lakh metric tons. Sugar sales for the year was close to almost 4 lakh metric tons as against 3.73 lakh metric tons. The sales volume was predominantly governed only, the domestic sales volume was governed only by release order mechanism, and company followed it strictly as per the release order mechanism, effective which came from 2018. This average selling price which we realized on account of export was around 34 as against the previous year 31, which helped the company to do better realization during the year. We almost carry 2.56 lakh metric tons of sugar at the end of the year as against 2.6 lakh metric tons of previous year. From the 32 rupees, the revenue for the sugar segment alone is 1,500 crores. Now we'll move to cogen segment. We have generated around 37.66 crores as against 35.72 crores and exported 20.54 crores as against 18.74 crore units during the year. The average rate which we realized was around 4.15 as against 3.67 of previous year. We also have 2 units, Karnataka and Andhra Pradesh, where we are all in PPA till 31st March and some more months in this current financial year, which is also will expire at then almost in the middle of the year. Tamil Nadu is not in PPA. We are only operating through third-party mode and IEX mode only. Our realization through third-party sales was better during the second half, which helped the company to make much more better realizations and better profitability in cogen segment. The cogen revenue for the year was about 130 crores as against the previous year number of 142 crores. As far as the distillery is concerned, we have produced the alcohol of 633 lakh liters as against 634 lakh liters of previous year. We sold about 594 lakh liters as against 627 lakh liters at an average price of around 59.70 as against 55.65 per liter during the year. Of this, 594 liters is towards ENA, which contribute 594 lakh liters. ENA contributes around 405 lakh liters, and also distillery balance accounts for the distillery ethanol sales. Now we'll move to some more information on the other business like Nutra business. Nutra revenue on a consolidated basis was almost it's close to 4 crores and had a profit of 19.34 crores as against a loss of 6.55 crores the previous year. As far as CapEx are concerned during the year, we have been sharing quite some time that we have been trying to be prudent in all our CapEx approaches. We spent some amount on expansion on Bagalkot distillery, which is in capital WAP, and also our transfer of equipment from Tamil Nadu to Aliyal is happening, which is also in WAP. Otherwise, addition to the fixed asset during there is only around 31 crores, which is mainly on account of some of the expansion programs like some revamping of facilities like godown, boiler refurbishment and cogen refurbishment activities, and some small expansion in Nutra activities. And also, we ensured that we manage our cash flow very effectively. And during the year, with the help of our stake sale liquidation, we could bring down the substantial portion of debt during the year, which helped us to ensure that the cost of debt is also brought down substantially. Our overall loan position at the end of the year is around 55 crores in standalone as against last year of 1,055 crores, of which long term is around 200 crores and short term is 355 crores in case of standalone operation. In case on a consolidated basis, we had 755 crores is a total loan as against last year of 2,000. And our expenses front, we have done a lot of cost reduction, and we from the beginning of the year and ensured that the cost is maintained in every activities in plant or every function or corporate office, and ensured that the cost reduction is done effectively, and we wanted to sustain it going forward also. We hope we will deliver what we promised to the shareholders. Thank you, sir. I leave the floor.
So should we start the Q&A?
Hello? Yeah.
Sure. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask any question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may please press star and 2. Participants are requested to use handset while asking a question. To ask a question, you may please press star and one. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, good morning, sir, and thanks for taking my call. First of all, let me congratulate you for the sharp improvement in the cash flow from operations and the sharp reduction in the standalone debt. And that is something we've been targeting for some time, so I'm very happy with that. But I had a few questions, particularly to the refinery business. Now, we have a reasonably sized refinery business, which is about 2,600 crore turnover business of 8 lakh tons approximately, if I'm not mistaken. And for the past 5 years, for some reason or the other, this business is giving us trouble. While some of the problems seem to be addressed on the power side, the continuing problems relating to freight rate and the unviability of the refinery still seems to raise questions as to the capital allocation for this business. And we've already lent another 400 crores in the third quarter from the standalone business to this business. So I wanted your thoughts on the refinery business going forward. That was my first question. Should I ask my second question now, or should you want to address that first?
Yeah, proceed with the question. We'll note down, then.
Okay. So my second question was relating to the alcohol business. We've seen a lot of announcements by various companies on expansion and in the alcohol business. So I wanted to know your thoughts on that, whether we have any strategy regarding any expansion in the ethanol business. That was my number 2 question. And my last question was related to the nutraceutical business, whether this 19 crores jump is something we should take as one-time jump, or whether the traction is there in the business. And if you could explain to us the key highlights of how we plan to move forward in that business. And thanks.
Yeah. Thank you. First, I would like to address Suresh this side. I would like to address a question on the alcohol business. As you know, the ethanol supply to the oil marketing companies, we have been participating. And this year will be a year of consolidation where we will maximize the alcohol supply to the OMCs. Now, our Haliyal unit have already started producing and supplying the B-heavy syrup-based ethanol to the OMCs. Our Bagalkot distillery has already started operations in the Q1 end now in the current financial year. So the year will be in terms of consolidation and running it to the full capacity. As of now, there are no immediate plans in terms of expanding further into the distillery business. Objective will be to maximize the supply to the OMCs and also utilizing the capacity to the fullest as far as alcohol is concerned. Nutraceutical, I would request Mr. Muthu Murugathan will be addressing you on this question what you have raised. Then we'll come to the refinery.
Yeah, thanks Suresh and Rajesh, good morning. So to your question, the 19 crore profit and the reasonable performance of the Nutra business this year has come about because of 2 reasons. I think strong sales of 2 of our product lines. One is spirulina and the second one is saw palmetto berry extract. Spirulina goes into the immunity segment and that's gained a lot of traction because of the pandemic. Saw palmetto berry extract, I think we've been able to organically expand the account base in the US, and that has driven this profitability growth. The trend looks pretty good for the immunity products and for spirulina going forward. For saw palmetto berry extract, we also have plans to launch the B2C business. That's something which we've been working on. It's a business that is built out on medical equity. We held back expenses related to the scale up of this business last year because of the pandemic, and we couldn't, our teams couldn't get in front of medical professionals to detail them. So we held back the expenses, but that is being rolled out in the current fiscal year. So to that extent, there will be an investment in scaling up this business. So that is likely to impact the earnings. But I think once that scale up happens, I think we should see more traction with these two products, and I think we should get back on a good path. Beyond this, I think this is the organic growth component. I think beyond this, as the company's financial position, as you can see, is improving, we will look at growth opportunities in this segment, and we are evaluating that.
Right.
Yeah. Thanks,
So in terms of
Muthu.
top line, what kind of growth are we looking at, say, on a 2 to 3 year basis on the nutraceuticals business? Any ballpark numbers?
No, I mean, I think as I said, with the company's position improving, I think we are keen on looking at inorganic growth options, and we are evaluating all the time to look at the right fit and the right synergy. So this is a future growth area, food and nutrition. So we would like to ideally have a bigger play in this. But yeah, I think now the improved financial situation has given us a chance to more actively look. So I would say the real chunk of growth or the real kicker would come with some inorganic activity, but it's too early to comment beyond that right now. We are evaluating.
Right.
Thanks, Muthu. Now I request Mr. Suresh Kannan will address the refinery question.
Good evening, everyone. As far as the refinery business going forward, we are happy to share that last financial year, the refinery posted its highest ever sale of 8.2 lakh tons. And going forward, as we have been developing more value-added customers for the refinery, we expect this sales momentum growth to continue. And the company is actively working in order to increase the sale to value-added segments such as institutions and direct customers, where we have seen close to a doubling of sales volume during the previous year. And in terms of operational efficiencies, hello?
Yes.
Am I audible?
Yes.
Yeah, in terms of operational efficiency, the company has been improving upon its inventory turns over the last financial year. And we are happy to share that compared to the last year closing of around 1,200 tons of debt, we have managed to bring it down to 400 crores at the end of March. So this business is extremely sensitive to the availability of spread between raw sugar and refined sugar. And based on the availability of spread, we should be in a position to increase our sales volume and thereby improve our efficiencies of operation. And given that our improvements that we have made on the working capital cycle should be sustained going forward. So that's the prognosis we have on the refinery business. Thank you.
Thank you very much. Anyone who wishes to ask any question, may please press star and 1. The next question is from the line of Kashyap from Thelem Partners. Please go ahead.
Yeah, hi. Just a couple of questions here. Firstly, on the nutraceutical side, it is encouraging to see 19 crore profit. We had this brand called Flementum, which was a high gross margin brand in the US, and we were kind of building it out on doctor endorsements. So clearly it seems that is showing traction. So while I understand, you saying that there will be some investments in the interim to scale it up, but just wanted to just check with you whether, over the next couple of years, can we actually, think about this current number multiplied by 4, that we can actually have a 19-20 crore steady state, maybe after this is built out in the next couple of years.
Hi, Kashyap. Good morning. I think that's, let me sort of step back and the market opportunity that we are after, I think that market size of prostate health supplement in the United States is about a $200 million market size in terms of dealing with early stage prostate issues and general prostate health. That's the market that we're playing in. Our aspiration is to go out and take a 10 to 15% share in this market over a 5-year period. And that's the intent. We control the supply chain right from the farm. We don't own the farms, but we have strong sourcing relationships of this product. We process it in our facilities, and of course now we've gone to the branding side. So So I think when that story plays out, you will play in sort of most of the profit pool. So yes, I think once that scale up happens and the rollout is happening in Q2 this year, we only do digital sales right now. It's not doctor endo sales, so the numbers are insignificant. Once that scale up happens, I think we can expect to get to the steady state, and the expectation is to get beyond this steady state as well going forward. Because ideally, a 10-15% market share, in this market with those high gross margins should give you should position you much better than even where we are currently.
Great. That's encouraging. And finally, one question I had was on the seasonal side. Like on one side, after seeing the government announcement of lending levels up, there is quite a bit of excitement in the return ratios for B-heavy and sugarcane juice, root molasses, ethanol seems to be encouraging. So I'm just wondering what is holding back, you to invest in this space. I mean, are you kind of unsure whether these government policies will persist favorably, or are we kind of being too conservative here? So just wanted to understand what stops us to scale up our capacity creation and to capture more of this seasonal opportunity.
Suresh, you want to take that?
Yeah. Thanks, Kashyap, for the question. And I think you are talking about the ethanol-based expansions. I think what is very important to look at is the capacities what we need to put in, what we are going to put in should be having captive sourcing of all the molasses. That is the extremely important thing. As of now, for the places where we have put in, we have got captive sources to service the displacing capacities. The seasons are not full in terms of the season period is hardly around 120 days in Karnataka. Tamil Nadu may be slightly higher. Of course, Tamil Nadu, you know that there is already a shortage of cane overall for the state itself. So in this scenario, what is important is, it is important to look at the utilization of the assets what we are going to put in. Unless there is going to be a confirmed availability of the molasses sources, even if it is from B-heavy and syrup, because B-heavy and syrup, during the season we can run to the full, and balance period we have to see whether we will be able to utilize the capacities to the fullest extent. Those will be the criteria which will be used for evaluation of future capacities in ethanol. Of course, there are opportunities like grain-based VNAs are also which are there. We have to start looking at what are the opportunities which are available before us. We are evaluating those things. Once we come to some conclusion on that, then we will be coming back and then sharing such information. As of now, I think it is better to look at utilizing the fullest capacity what we have to run to almost 300 plus days for the year. That will be the objective for the current year. Thank you.
So Suresh, if I could just add, and Kashyap, as Suresh said, I think we are very seriously evaluating this. I think what would also be helpful to industry in general, and would give a comfort. Of course, I think it's a great initiative which the government has put forth on the ethanol blending program with multiple benefits. But I think in reality, what would also give good comfort is to really understand the auto industry view on this, and I perhaps feel that there is less discussed or written about that. I think some angles of the program are covered very well, but from the auto industry's endorsement of it, I think, you guys are talking to multiple companies, and there's been very good reports which the investor community has put out. But perhaps some insight into beyond an E10 or between an E10, E12 to an E20 level, how the auto industry is looking at it, and are they endorsing it, especially the guys with larger market share. I think that would give a lot of comfort, and I think we need a lot of ethanol to help with this very sort of forward-looking initiative. That I think would be useful insights.
Yeah, helpful. Maybe if there's any feedback, I'll circle back to you. But finally, just a question for Mr. Ramesh Kumar. Just wanted to, I missed the line was cracking, so I missed the number of days on Concall X Coromandel, the debt on EID's books. and the breakup between short-term and long-term. If you can help me with that number.
Yeah, sure. The EID standalone, it is a long-term loan of 200 crores, short-term loan of 355 crores. So EID standalone is 555. And then we have only other refinery business where we had a long-term of 100 crores and short-term of 100 crores, 200 crores, that's all. Total put together 755 crores.
Okay, great. Thank you.
Thank you.
Thank you very much. We have a next question from the line of Ritwik from One Up Financial. Please go ahead.
Hi, good afternoon, everyone. Thanks for the opportunity. Sir, I have a few questions. Firstly, on the shifting of plants to Karnataka, what is the status on the same, and do we expect to commence production in time for the coming sugar season?
Yeah, thanks for the question. The process is on in terms of shifting our Silicon assets into the Alial plant in Karnataka. The process is going on despite all the challenges faced by us in terms of COVID, and we expect to hit the season, which is expected to start somewhere in October end or November. We should be in time for the season. As things stand by, we are really with all the COVID-3 also coming in, all the efforts are being put in to ensure that we go on time for the season.
Okay, sure. So would it be fair to assume that we could have about 3 to 3.5 lakh tons of cane crush from this plant itself?
Yeah, ideally it should be.
Okay, sure.
It also depends on how long the season is going to run in Karnataka. Depending on that.
Okay, sure. And sir, similarly, status on the Bagalkot capacity. I believe you mentioned that we are going to start operation or have just commenced operation at that facility.
As we speak today, the plant has started operational. This was not delayed because of all the COVID-related challenges, and it should start running full steam for the balance period of the year.
Okay, sure. Okay, so the 60 KLPD capacity is up and running.
Yes.
Okay, sure. And so on the cost reduction measures that we have taken in the last year, do we have any more programs in place to reduce it further, or this level should be sustained on the employee cost and the other expenses?
Cost reduction initiative for a business like sugar is an ongoing process, continuous process. One is for the last year, lot of things which were there, which will continue. Some of the things which are related to working from home and all may not continue because we are resuming operations. The officers are going to start working, etc. However, on the operational and the factory side, our endeavor will be there to continuously look at opportunities to reduce costs, whether it is on the variable cost or on the fixed cost. Those initiatives will continue to be there for the company. Every pie is more important for us, so those activities will continue.
Okay, sure. Okay, and so I have a couple of questions on the operational figures. Can you give the refinery EBITDA and the current conversion spread as of for FY21?
Hello.
Hello. Yes, sir.
Can you please repeat the question, please? Sorry, we couldn't catch you, please.
Yeah, the EBITDA figure in rupees crores for FY21 and the current conversion spread that we give in every quarter for the refinery business.
Okay, the EBITDA for 2021 was negative 64 crores for financial year 21. As far as the current spreads are concerned, we could look at it in two ways. If you look at spot spread, the spreads are extremely low in the region of $20 to $30 if you consider freight from Brazil and the current white premiums that are prevailing. However, since the company has a policy of hedging forward, we should be in a position to continue to sustain the spreads in the region of 40 to 45 that we have been operating with.
Okay. And sorry, sir, on the EBITDA figure, you mentioned minus 64 crores.
Yes.
Okay, it is minus EBITDA level. Okay, sure. And sir, we exported about 115,000 tons of sugar in FY21. That's almost the entire increase in sugar sales for FY21. So going forward, what kind of number that we should build in for FY22?
See, FY22 is concerned, depends on the allocation what government is going to give. See, already this year they did not give any additional allocation for the company. However, we are trying to pursue other alternative measures to ensure that the same number is reached.
Okay, sure. Okay, sir, that's it from my side. All the best and thank you.
Thank you.
Thank you very much. A reminder to the participants to ask a question. You may please press star and 1. The next question is from the line of Bhavin Chheda, Nam Holder. Please go ahead.
Good afternoon, sir, and congrats to the entire management team to deleverage overall operations across standalone as well as refinery. Sir, first my question is on refinery. The OP loss of 64 crores you mentioned. What was the spread earned in FY21?
Yeah, spread for the year FY21 will be around $42.
$42. Okay. And sir, volume mentioned from the refinery, you said you sold around 8.2 lakhs, right, sir?
Yes, for the year as a whole.
Okay. So as you said, the current you have hedged around similar levels only. So we expect the losses to continue in FY22, or you are doing something to reduce cost and make this EBITDA break even or positive? What are the steps we are doing?
No, as far as the current year is concerned, as you have mentioned rightly, we have hedged spreads at a similar level. And as far as cost of operations is concerned, we continue to work on reduction of the same. And we expect that we will have a improving EBITDA situation for FY22.
So, but I think the number of the loss was quite high, so you have not yet reached break-even, right? Or was there any exceptional number there, or this was purely business EBITDA loss of 64 odd crores? Or if you can guide on conversion cost at the refinery, what was it a couple of years back, what it is now, then what are the steps taken to reduce that?
See, there is a one-time exceptional item this year. If you read the notes to accounts, there is an exceptional item 120 crores. So they did as after the exceptional item.
Okay, so this won't be there, you're saying, in FY22 or so.
Yes.
Excluding exceptional items, you were already profitable at the EBITDA level.
EBITDA.
Hello?
Yes.
Okay. So coming to the sugar business, if you can guide the crushing targets for the upcoming season, as well as your distillery and cogen targets.
See, as far as the sugar cane volume is concerned, it is expected to be somewhere around 5 to 10% better than the current year. That is one. Second is on the distillery side, the Bagalkot distillery volumes were not available last year. So to that extent, the total volumes will go up in distillery.
Okay. And any cogen improvement would be there?
Improvement to the extent of the increase in cane crush will be there. Additional quantum crush, to the extent equivalent units will get exported.
Sure. And sir, the other number you mentioned was, I think, the export NSR of 34 rupees you mentioned versus 31 in FY20?
Last year was 31 rupees realization. This year we made around 34 rupees. in export alone, domestic sales export.
Domestic sales export. And this would include the government subsidy on exports, right, sir?
Yes, including subsidy. This year we had two subsidies. One was at the beginning of the year 10 rupees up to September, and the new policy which is for 6 rupees. So combination of both, we have 34 rupees.
Okay. And I think it is reduced to 3 rupees now, subsidy?
4. Effective from 10th May, it is 4 rupees. Effective from 20th May, it is 4 rupees.
Okay. And what was your domestic average? So you gave this export average. What was the domestic?
Same, around 34 rupees, sir. Around 34 rupees only. Okay, that is also around 34 rupees.
So domestic average is also around 34. Okay.
Yeah.
Okay. So you will be now largely debt-free both at the standalone and refinery level in FY22, right, sir? Any debt reduction targets for this fiscal?
I think we have already achieved the maximum debt reduction during the year itself. However, we will try to focus to reduce the debt continuously. We will try to ensure that how we can improve the performance and reduce the debt further also.
Sure. And sir, my last question again on the nutraceutical side, you have made a very good quarter. I think I missed on the comment where you said that next year the same numbers won't be repeated. What was the specific reason?
Yeah, hi. So the reason for that is there will be an expense related to the scale up of the B2C business in US at the Concall level. The US subsidiary will be scaling up its B2C business of the Flomentum Health, which is the prostate health product. So to that extent, on the Concall level, I don't believe we'll see this trend because there will be that investment. The trends at the standalone are looking good.
Okay. And how much was that contribution in consolidated which is getting made in FY21?
In could you repeat that?
No, how much that nutraceutical part which is accounted in consolidated, which would be affected in FY22?
I think it's around 9 to 10 crores.
This is on the profitability side or on the top line side?
On the profitability side.
On the profitability. Okay. Right.
That's pertaining to FY21. Now, of course, 22 will be different because there's going to be an expense. But yeah, pertaining to 21, out of that 19 crore profit that we made, the relevant part is about 9 to 10 crores. Yeah.
Sure. And sir, can you share plant-wise cane crushing of FY21 of this 39.69 lakh?
Sorry?
The plant-wise cane crushing breakup?
What FY21? Maybe we'll check out the numbers.
Okay. So
I can broadly tell you Tamil Nadu will be somewhere around 14-15 lakh tons. Andhra will be around 50 lakh tons. Balance will be Karnataka.
Sorry, sir. Andhra would be how much?
Around 5 lakh tons. 4.5 lakh tons.
Balance is Karnataka. And sir, you mentioned 5 to 10% cane growth. Plants which are shifted to Karnataka will give you 3 lakh odd. So that's the growth number you are factoring, right? You are not factoring any growth from the existing plants?
Yeah, existing already we have to wait and see because Tamil Nadu we have to see how much of increase is going to happen. We'll have to wait and see how the effect is going to come because yield factors are also there. How much of rain Tamil Nadu is going to get, we'll have to wait and see.
Thank you. We have a next question from the line of Gautam Dedia from Nalanda Securities. Please go ahead.
Hello, can you hear me?
Yes, sir.
Yeah, I have two questions. So firstly on the nutraceuticals division, so we've seen operating margins of 30% and in previous calls we've said that our aspiration is to reach a margin of 15 to 18%. So I just want to understand that once this investment is done over a 2-3 year outlook, does the cost structure allow us to again get to these margins? Or so would you be revising this 15 to 18% outlook? And my second question is on the refinery business. can you just give more details on what this 120 crore write-off is exactly? And for this quarter, what is the EBITDA loss?
So Gautam, hi, good afternoon. I think once we scaled up the Flomentum business and then at the Concall level, I will sort of maintain this 15 to 18%. I think this year we held back on some of these expenses, so on and so forth. That's why you're really seeing it. But I think in reality, once we scale up a business and look at it in steady state, I still hold that 15 to 18% margin intent at an op profit level.
Okay. And on the refinery end?
Yeah, so I'll answer that question here. This is Ravichandran. Look at the refinery. We started this from that time when we started from that to today. We have now gone up to 8.5 lakh tons, which is about 2,600 to 2,700 tons of melting per day. So that is without much investment. Second, so that the melting rate has become very steady. That is first improvement we have done. Second is we have now moved to negative working capital. Last 6 months, if you look at from October 2020, we are on to negative working capital. That means we are able to realize our money even before we pay off our suppliers and then take care of the production as well. Third, if you look at our sale in terms of the breakup, institutional and our container sale has substantially increased over the last few years. So that is also adding to the improvements in margin, etc. And then the steady melting rate is also contributing to better power consumption, utility consumption, all those kind of things. And we also now brought down the debt, so that it is only total about 300 crores today. So all that improvements we have done, but the biggest focus what we had in the last 2-3 years is to how to get to negative working capital. So we are relentlessly focusing on reducing our inventory year after year after year. What we used to carry some 4 lakh tons of inventory in the past, 4 lakhs, 3 lakhs and all that. Now it is almost down to close to say a lakh or less than that. So in the process, what happened when we came down very low on the stock in 2020, around March, we had a physical verification and we found a difference of about 40,000 tons of inventory. So that inventory we have to take a write-off because in the past we were never able to do actual physical verification. That means actual weighing we couldn't do. We are only doing a survey. So the survey, because we use a laser beam, there is a little bit of variation you get compared to what you actually carry in the books. So we were focusing, so we thought the best way to actually weigh the quantity what is available. So that opportunity has come because of our focus on reducing inventory. So the write-off we will take this year. So the one-time write-off we have taken this year.
Okay, and what was the loss for the quarter?
So without accounting for the 120 crores, how much the loss? 20 crores negative, without accounting for the loss.
And what was the reason for that loss? Was it just like some decline in production or?
No, there is some drop in sales volume and some MTM losses.
Okay. And we don't see this problem of physical verification on our sugar mills in India, right? In the part. How does the
no, see what happens other sugar factories we don't carry inventory. So all the whatever we produce is immediately bagged. So they don't have raw sugar in factories. Only this refinery has a raw sugar of such large quantity.
And I'm assuming going forward now, because we have no stock, this won't be repeated, right?
Yeah, so what we have done, we have made certain improvements in terms of the clearance of yields and we are no ship-to-ship accounting, all that. So this kind of variation will not be there in the future.
Okay. Thank you, sir.
Thanks.
Thank you very much. In the interest of time and fairness for all participants, please restrict your question to 2 per participant. We have a next question from the line of Shaurin Shah from Enam Holdings. Please go ahead.
Hi, sir. Thanks for the opportunity. Sir, I have 2 questions. Sir, if you could share your cane cost in FY21 for Tamil Nadu, Karnataka and Andhra Pradesh. Hello.
Ramesh, you will share the numbers?
Yeah, I'll tell, sir. No problem. Tamil Nadu roughly around 2,950. Andhra is around 3,000 rupees and Karnataka is around 3,250 rupees.
Okay.
Landed cost, cane landed cost.
Landed cost. Okay. And sir, what's our guidance for guidance in volume for refinery business for FY22?
Should be same almost.
Around 8 lakh tons.
Yeah, similar levels like last year.
Okay, sir. Thank you. Thanks a lot.
Thank you very much. We have a next question from the line of Abhishek Banerjee from Aquarius Capital. Please go ahead.
Yeah, hi sir. My first question would be on the refinery side. So there was a clarification on sourcing raw sugar from the domestic, and that would be deemed to be considered as an export. So what was the status of that? My first question is that. My second question is on the refinery side. How are the spread are going to go going forward, and what is the replacement cost of a refinery plant right now?
Yeah, thank you very much. As far as your first question is concerned, the Department of Food has already issued a clarification in the month of March that the sugar that is supplied to the SEZ refinery also qualifies for the full amount of export that is given to the mills. And consequently, we have also started sourcing sugar domestically from the Indian mills. So that's as far as the first one is concerned. The second one, if you can repeat, please.
Sir, what is the replacement cost of a refinery plant right now, and what kind of spread are we looking going forward?
Yeah, I think as far as spread is concerned, we are expecting a similar spread as last year, as we were discussing, between $40 to $45. Currently, the market is stressed on account of excess refined sugar availability. So the spreads are very low as we speak on the spot market is concerned. However, we expect this situation will change going forward in the next couple of months as the higher freight and the difficulty in terms of selling the sugar at higher prices disappear. And also the Indian export campaign, that the sugar that has been available over the last 6 months has already started tapering, and therefore the refined sugar demand should pick up. And as a result of which, the impact of that we can see also as part of the white premium, and therefore our spread is concerned. As far as the replacement cost, it should be in the region of around 700 crores and above.
Okay. So just one the first point, you mentioned that you have already started sourcing your raw sugar from domestic plants. So how much benefit are we accruing to ourselves, and why are we not sourcing it from our EID Parry plants?
Yeah, as far as the sourcing from EID Parry, we have also sourced some quantity from EID Parry mills are concerned. And in terms of benefit, the benefit depends upon from the time we source. But in general, this sugar is between $5 to $10 cheaper than the sugar that we can get from Brazil.
Okay. So basically, our spread should increase going forward since we are sourcing at $5 to $10 cheaper.
Yeah, if you look at on absolute basis, yes. But if you look at on a relative basis, the spreads are also have moved down to factor in for the availability of Indian sugar. So yes, we would at the end of the day have some benefit over spread compared to the sourcing from Brazil is concerned.
Okay. And your EID Parry plant, which is sourcing to SEZ, that will get the export benefit as well from the government?
Yeah, of course they will qualify for the full quantum of export benefit.
Thank you very much. We have a next question from the line of Hitesh Doshi from Nirzar Securities. Please go ahead.
I think more or less my questions has been answered. Thank you so much. Hello.
Thank you. Thank you, sir.
Yeah, thank you. Wish you all the best.
Thank you.
Thank you. The next question from the line of Ketan Lydia from Nalanda Securities. Please go ahead.
Yeah, good afternoon. Just one question, that now that you are comfortable with the debt levels at Concall and standalone levels, is that the management has any dividend policy has been framed for the future years for the shareholders?
We have a dividend policy not only for EID Parry, even across the group. So yes, based on the future profitability, the policy will be followed.
Okay. Thank you.
Thank you very much. We have a next question from the line of Sanjay Shah from ASA Securities. Please go ahead.
Good afternoon, gentlemen. So we have given some 400 crore intercorporate funding to our subsidiaries, and we carry many subsidiaries in our book, maybe around 23 plus JVs. So do we have any program of consolidating the loss making or the subsidiaries which are not efficient? And about this 400 crore, do we foresee any more loan going from our?
Majority of the subsidiaries are from Coromandel. So the subsidiaries EID Parry is majorly Coromandel, then Refinery, and then Valenza. Right. So EID doesn't have many subsidiaries.
So this 400 crore is going
only to Refinery. That is for Refinery.
Refinery.
Yeah.
Okay. We charge
Oro doesn't require any money from us. Oro doesn't require money from us.
Hello, can you repeat, sir?
I'm saying Coromandel doesn't require money from EID Parry.
Yeah, that I'm aware of. But about refinery business, do we see?
That we have given 400 crores. That's it.
400 crores this year. So current year, they require any more funds?
No. Already they are into negative working capital loan. The total outstanding is only 200 crores today for that. Total loan 200, 300.
So I was worried because
out of that repaid 100 already. They have repaid 100 out of the 400 already.
Out of the 400 crores issued by EID to PSRX, the refinery business, they have already repaid the 100 crores back to EID itself in the current month. Hello?
Thank you very much.
Hello?
We have a next.
Yeah. Okay, sir.
Thank you very much.
Thank you.
The next question is from the line of Anupam Goswami from B&K Securities. Please go ahead.
So, going forward, what sort of recovery rate we should follow in the sugar business? Now that the plant is also moving from Karnataka, how much improvement shall we carry?
By and large, it should be in line with what we have done. With the extra volume coming from Karnataka, it could be another 0.03 to 0.05 improvement because the mix is more skewed towards Karnataka.
Okay. So, one thing, we have not got any commitment of capex right now since we have just recently completed our distillery program and also the process of plant shifting is also there. So, any dividend coming from Coromandel going forward, how is that going to be utilized? Will it be rewarded to the shareholders or will it be used in working capital or anything?
No, our aim is always to reward the shareholders. In the last year, we had some difficulties. So hopefully everything works out the way it is going on. We hope we should reward the shareholders in future.
Okay, sir. Thank you. That's all.
Thank you very much. The next question is from the line of Ashutosh Chaubey from Centra Advisors. Please go ahead.
Yeah, thank you for the opportunity. I just have two questions. One in the line of operating business. And so my first question, I just want to understand from the operations point of view that setting up a boiler, how does that improve the number of days of this distillery capacity?
Setting the boiler.
So setting up a boiler, how does that increase the number of working days from probably say 250 to 300 or 300 to 200?
Technically, the incineration boiler will help you to handle the effluent. Practically, you will not have any effluent coming out of the system. That means except for the boiler maintenance days and other days required for regular periodical shutdown, the distilleries can run Depending on the local conditions, you can run anywhere between 300 to 320 days.
So normally during rainy days, we have problem in effluent disposal. So that will not be there. We have an incineration boiler.
Yes.
Basically.
That's the advantage of having an incineration boiler. The distilleries which are operating around 200 days, 250 days because of the rain-related challenges, if they put incineration boiler, they can come and touch the 300 mark.
Okay, understood. My second question is on the reason that reforms have been happening in the entire sugar sector. So I just want to understand from the company's point of view that recently everything that has been happening is in the favor of sugar sector, probably favoring each and every company in this sector. A lot of companies have been expanding their capacities. A few have been refraining. A few have been expanding, but with a very few expansion, like for 50 or 20 or 30, like this, the capacity expansion is happening. Also, the global view right now, the calamities that has been happening in Brazil and Thailand and all these places, this is again pushing up the global sugar prices. So everything seems to be working in favor of this sector right now. I just need to understand what is the threat that can be something that has not been accounted for right now, something that cannot be worked out in this favor. Can it turn out to be like a too good to be true story, clean availability or auto sector or whatever it can be? I just need to understand how this going forward. What can be the threat?
Unless out of the blue, if you look at it, one could be the oil prices that can swing the ethanol consumption, whichever correlation. Number one. Number two is any weather. Act of God. Any weather. You have seen, if you remember, 2016-17. 15-16 has been a very good year for cane. 16-17, Karnataka went into a sudden drop. So any events like that can swing it. Sugar prices can go up, but you will not have much sugar to sell.
See, when the going is good, enjoy the run here. Why you want to worry about bad days, huh? You are very well. I'm happy. I don't want to get worried now. When I will become sad. I want to enjoy the moment now. That's all.
Yes. I just wanted to get a view, as in what everything is good. Everything is favoring right now.
Yeah.
I think what's getting reported is only good. So I think, as Ravi saying, I think we must all be happy about that. So yeah, it doesn't seem to be any threat the way it's getting reported in the media and in most circles.
Okay, understood. Thank you very much. That is all.
Thank you very much. That was the last question for today. I would now like to hand the conference over to Mr. Aditya Babal for closing comments. Over to you, sir.
Hello?
Yeah.
Sorry. Yes, thank you everyone for taking that out. I understand that there were a few questions which were still left unanswered. Would be very happy if you can write to me or Mr. Mohan Rath, and we'll come back with answers for the same. Sir, Mr. Suresh, I'll hand over the floor back to you if you have any closing remarks.
Yeah. Thanks everyone for taking your time out and joining this call. On behalf of the company, I would like to once again thank all the people for participating in this call. Thank you.
Thank you, sir.
Thanks, everyone.
Thank you. On behalf of Axis Capital Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.